Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews where we bring in someone who's got something interesting to say about markets and all sorts of things, and there's nothing more exciting at the moment than what's happening on the gold market. So we've got Mike O'Kane in from NZ Mint, the head of bullion, to talk about action on the gold market where prices have hit fresh record highs. They seem to hit them every day, but at the moment we're at unprecedented levels. Tell us about the sort of action we're seeing on the gold market at the moment.
Thanks, Bernard. Well, the last week we've seen multi-number percentage growth. So we started the week sitting at around 1,600 US an ounce. We're now sitting at about 1,750. We're seeing that volatility that everyone's spoken about previously is really starting to kick in. We hit $1,780 an ounce yesterday morning, our time. That is a high. Never been anywhere near it. We're definitely reaching those areas where we will equal the 1980 high in inflation-adjusted terms. It's just a matter of how long.
What is that in inflation-adjusted terms?
Depending on who you talk to, anywhere from about 1,900 US to 2,200 US. So again, it comes down to what measurement and rule you're using to measure the inflation over those periods.
It's interesting too, the gold price is up in New Zealand dollar terms quite sharply in the last couple of weeks.
That's probably more of a response of the US currency more than anything else. Gold is up against everything. It's at record highs in euro, pounds, US dollars, Kiwi dollars, Australian dollars.
Swiss francs?
Yep.
Wow.
You name it, it's hit record highs. Predominantly it's in the short term, we're looking at that AA rating in the US. That's what sparked all of this in the short term. Long term, we're still seeing the effects of QE1, QE2. In theory, whatever they bring out, we had the FOMC announcement this morning, which pumped the price another $20. Again, whatever tool they bring out of their toolbox to ease the problems they're suffering at the moment is again going to push the price even further.
Who's buying gold? Is it mums and dads? Is it hedge fund managers? Is it central banks? What's going on here?
Everyone. We're seeing central banks, as I've said previously, the Central Bank Gold Agreement, the CBGA, that group are still net buyers this year. 12 years of selling 500 tonnes a year. This year we're net buyers. It's a complete turnaround. Hedge funds are buying. Large corporate investors are buying. Mums and dads are buying in massive amounts at the moment. We are seeing an influx of new clients that we've not experienced since 2008 and hadn't experienced prior to that. Off the back of that, we're also seeing a lot of sellers locally. So people taking advantage of the high gold price are taking the opportunities to make some profit. Some of those have only held for 2 or 3 years. Some of them have held a lot longer. But it's a nice big flow through at the moment.
And what are people telling you, the new people who are buying? What are they coming out with when they say, this is why I'm buying it?
Mostly it's the flight to safety, which seems to be the theme globally. They're concerned that you've got problems in the Eurozone, so problems in the US zone, problems in the stock market, problems with bonds, issues around property values. They're looking for something that's essentially a safe haven, and for a lot of people gold seems to fill all the boxes still. And
are people actually getting their hands on it, or is it something that's still a financial trade in terms of, well, I can't actually see it, but I know I've got an account somewhere that has it?
Well, from our perspective, people are getting their hands on it. We deliver physical product. That's all we offer, is the ability to buy physical product, stash it away, or stash it with us if you want, and we'll cover the insurance. But there are large wholesale moves in the ETFs. The COMEX hit a record high yesterday of 1782, 1783 last night, before pulling back after the FOMC announcement. So obviously there is a lot of movement in all markets related to precious metals. However, off the back of that, we've also seen a disconnect with the silver price. So silver's actually retreating price-wise, about $2 overnight. More of an indicator that silver's still more industrial than financial, where gold is more financial or monetary than industrial.
Because a few months ago, silver was rising even faster than gold. Why the disconnect?
Well, silver rose very, very quickly. So silver got up to about $60 US. So there's been a pullback as profit taking kicks in and people look at the market and say, oh, it's overheated, so there's a pullback there. At the moment, it's primarily around monetary assets, and gold is the key element in that.
How useful is gold, really, if there's some sort of complete meltdown in a financial system? You can't eat it, you can't... it's very difficult to shave off bits of it and buy some milk or whatever. I mean, for those people who are really worried about a complete meltdown, how useful is it? In a complete meltdown,
I have a joke. The only thing that's going to be useful for you in a complete meltdown is lead in the form of a bullet. If your concern is, shall we say, the apocalypse or Armageddon, then you should be looking at stocking up on water and canned goods, not financial products.
Baked beans.
Yep.
There's future in baked beans.
Yep, definitely. As with anything, it's a commodity. As a physical metal, it does have a lot of properties that lend itself to being a monetary item. You can actually shave bits of it off. It's very malleable, so it's soft and easy to do things with, which is why humans have used it for 2,500 years as a coin. Its use in the electronic world is still unprecedented. Everything you own that has electronics in it has gold in it. Yeah.
So looking ahead now, any sharp increase like this in any price of anything forces people to ask the question, well, it can't last. That's got to come back at some stage.
Yeah.
What's your view?
As with any market, any commodity, if you see a sharp increase, there's bound to be at some stage some profit taking. And in a way, that's actually a good thing because it means you get a pullback, things settle down a little bit, and you can go back to whatever period you were in, whether it's bear or bull market, and carry on. At the moment, we're living on a day-to-day, and at the moment for the gold market, it's even down to a minute-to-minute sort of lifestyle where the price will be up $20 1 minute, down $20 1 minute. So it's very hard to know where we're going to stop in this particular roller coaster. But as I've said, the long-term prognosis is still very, very strong, given that everything that's being done to fix the current financial issues are inflationary, and gold historically reacts to inflation by increasing in price.
There we have it. Mike O'Kane, head of bullion at NZ Mint, telling us about gold and what's happening. A monthly report we have with Mike. I'm Bernard Hickey from interest.co.nz. That was another in our series of double shot interviews.